Expiration time in binary options trading refers to the specific point at which a trade is settled, determining whether the trader's prediction was correct or not. It is one of the most critical components of binary options trading, as it directly impacts the outcome of a trade. When entering a binary options contract, the trader predicts whether the price of a chosen asset, such as a currency pair, stock, or commodity, will rise or fall by the time the contract expires. The expiration time sets this deadline, concluding the trade and establishing whether the option ends in the money, profitable, or out of the money, loss-making. Binary options offer diverse expiration times, ranging from as short as 30 seconds to as long as a few days or weeks, depending on the broker and the trading strategy. Each expiration time is suited to different trading styles and market conditions. For example, ultra-short-term expirations, like 60-second trades, appeal to scalpers and traders who thrive on rapid price movements in highly volatile markets. Conversely, longer-term expirations are favored by traders who rely on fundamental analysis and broader market trends. The choice of expiration time plays a pivotal role in aligning a trader's analysis with the market's behavior. It also influences risk management, as shorter expirations typically carry higher risk due to sudden market fluctuations, while longer expirations allow time for trends to develop more predictably. To determine the appropriate expiration time, traders need to assess factors such as the time frame used for technical analysis, market volatility, and their overall strategy. For instance, analyzing 15-minute charts might suggest selecting an expiration of 15 to 30 minutes to ensure the trade has adequate time to mature within the observed trend. Additionally, market conditions like economic data releases or geopolitical events should guide the selection process, as these can cause abrupt price movements that may not align with the chosen expiration. Choosing the right expiration time requires understanding the asset being traded, market timing, and an awareness of the risks involved. A well-chosen expiration time can optimize the chances of a trade ending in profit, making it a cornerstone of effective binary options trading.